Adoption of the draft annual plan. Jane.
You can go back. He'll allow you to go back.
Sue Maver,
Your Worship,
yes.
I'm sorry, Your Worship, I didn't realise that suddenly we're going to pass a bulk. I had a question, and the next one coming up, the local authority shared services, just in regards to the comment on the financial operating within budget and has achieved a reasonable revenue stream. There must be a costing belonging to that. Does that help our costing toward that organisation or not?
The contribution of the councils in general toward these shared services is about 80,000 a year spread out through the councils. So our contributions spread over the two LAS is probably 15 to 20,000. That gave us a entry door, for example, into the insurance contract for all of the Bay of Plenty region. So we're able to guarantee as much as you can in today's market our insurance cover at the lowest cost based on volume, because as a standalone council our ability to negotiate insurance rates is a little bit different to the whole of the Bay of Plenty. So that's just one example of where in the shared services world we've actually benefited from that particular investment.
Thank you.
Thank you, Alan. Thanks. Okay, item number 11, adoption of the draft annual plan. We have Neil, Sue and Lisa. Nice to see you.
Your Worship and Councillors, this report seeks the adoption for consultation of the draft annual plan and of the summary document. The draft annual plan contains the same projects and the same finances that we presented to the last council workshop, which was the one on the 25th of February. Since the production of the agenda, we found some typos in the report. And so what we've done is we've done some replacement pages to correct those typos. Now we sent them out with we might not need to put them out because we have put them out already. We've sent them out with the Councillors' weekly update, but I've got some spare copies if people need them. There's an additional typo that we found since we produced those and sent them out, and that's on the prospective statement of comprehensive revenue and expense, which is on page 37. We've also got a revised one of them for everybody because no one would have that one. You'll see in the document that we've highlighted some of the projects in story boxes. Basically, they're in two main categories. There are those projects that are in the draft annual plan that we want to highlight, so things like revitalising Turangi, the continuation of the extended opening hours at the pool in Turangi, and the wastewater projects. Then there are projects that are not included in the draft annual plan, but Council is seeking feedback from the community on. And you'll see there's information on the enlarged rural fire districts and whether we want to be involved in that, whether we lease the space beside the Lake Terrace viewing platform, whether we have a digital screen outside the eyesight, and whether we sell the 2 Forest Tower Street car park. So those are projects that are included for feedback. The summary document, as you'll see, has also been worked up substantially since the agenda item, and those projects are included in that. Lisa, do you want to say anything about the summary document? You don't have to if you don't want to.
The summary document is essentially the main reason for getting information about the draft annual plan out into the community. So what you'll see before you is the newspaper slides, which will be published in the Taupo-Kaingaroa next Friday, the 4th of April, and also the reduced version that will be mailed out to all the out-of-town ranks. In addition to that, there will also be a special page dedicated to Mangakino, printed in the day for the advertiser the week before we go out here to discuss the details of the plan with the community. So we've certainly headed for a very bright visual approach as opposed to being quite text heavy, and yeah, hopefully it will achieve the desired results.
We're also planning a number of consultation events with the community. We are going to the monthly Grey Power meeting. We're attending the Turangi After 5 meeting. We'll be outside Whitcoulls again this year in Taupo. We'll also be at the Taupo water treatment plant opening. We're going to be in the mall in Turangi, and we're going to have a joint meeting with the business community on the 10th of April at the GLC. We're also going to Mangakino, and we're particularly going to the Hui hut in Mangakino. Now, last year on our consultation events, we had at least one councillor at each of those events, and we found that hugely beneficial. So if you're keen, I've got a list which we can circulate, and you can let us know which events you're able or willing to attend, because it does help a lot. As a result of the changes to the document and the summary, I do need to amend my suggested resolution by adding the words "with amendments," because what you've received in your agenda item isn't quite what we're asking you to adopt as a draft for consultation.
Any other questions or queries? Councillor Williamson.
Yes. Thank you, Your Worship. Just looking at this prospective statement of comprehensive revenue and expense, which is on page 57 of the agenda item number 11, draft annual plan. And I'm just trying to simulate the new figure doesn't essentially change the point, because obviously it's easy to pick out financial information out of these reports, and little earnings can be a dangerous thing. So I just wanted to draw attention to Mr. Ward with respect to, like at the annual plan, the net deficit after tax was 5.5 million. The forecast for this next coming year is 492,000, and the annual plan says 1.8. For that reduction for 5.4 to 1.8 reflects that 3.65, which is presumably the increase in rates to cover that 3.65 for the debt structuring levy.
That's correct.
Perhaps you could just, obviously, when people talk about balancing the books, people think maybe zero balance. So perhaps you could just explain why those still are in the brackets, please.
Yeah, certainly.
It's not on, is it?
Is this working? No, it doesn't sound. I'll just talk loudly, shall I?
Yeah.
Yeah, I think all the volume's gone into Alan's mic. Right, crikey, where do we get to there? Okay, the balanced budget. So the 1.8 million that's shown there is still reflective of the fact that it's the third year of the financial strategy, and that we are applying asset sales the final year for the asset sales to be applied to balancing the books. So that is what that is reflective of. Does that answer the question?
Thank you.
Councillor Cousins.
Just in the information, through you, Mr. Chairman, the information, the agenda we got was only a partially complete one of these, and I see on this one here it's got the rates, etc. in there, and the percentages, which the other one doesn't have. In Taupo %. So we're saying we finished our rating. When can we have that information?
What exact information are you referring to, Councillor?
Because that in this booklet we didn't have the figures that are on this here about what percentage of rates are going to go up and down, who's going to pay less rates, who's going to pay more. It wasn't in here that we're given in the agenda.
However, that information was supplied to you in the 20th of February council meeting. Beg your pardon, workshop. And a copy was also sent out on Friday, according to Lisa.
Sorry?
Just very quickly, Your Worship, in the 11.2 on our agenda, there's some words there that I'd like changed. The comments are made prepared on the basis of the direction provided by council through workshops. If you go through the 20th of February and the 25th of February. Most of it is the logistics of how something takes place. At no stage have we had the chance to debate what's in that annual plan in regards of any cost increases. And could I just ask Mr. Ward that part of the due process we were to go through was the fact we would have that meeting on the 20th and 25th of February, which happened. It was then tabled that we'd finalise the draft annual plan on the 7th of March and then would approve it today being the 25th of March. That did not take place, and I'm not prepared to accept this annual plan going for consultation when, for instance, I've just been handed this piece of paper today. I can't read that in 5 minutes, and I'm not prepared to make a decision one way or the other, but I certainly want some debate in some of the areas that we can still prune better than what we have. Now, I don't want to hold the process up, but even to affect the wording such as council will fund the shortfall from in rates from property and forestry sales. I'm still trying to get my hand around that, because if you still want another 3-point-something million, but that shortfall other than the 0.9 is going to come from that, why are we asking for more money? But it's the procedure that's taken place that I utterly disagree with.
I'll answer the one part of that, and I think I'll pass the other part back to the top table. With respect to the statement here that was handed out today, the numbers in here are exactly the same as what's in your agenda item. What I do need to draw your attention to is and this is what we alluded to earlier in the Chief Executive's report, is that we are trying to align the annual report layout to be identical to the annual plan layout. So the only changes here are actually taking the area that says asset development and other gains and losses, the 4 lines there, is taking that $2.9 million out of the number that was in revenue and popping it down there. So there is absolutely no overall change in the numbers. It is an accounting. It is actually for clarity that we've made the change. So it's the same information that was provided in the agenda.
Your Worship, I need to know which agenda are we talking about. Are we talking about the draft annual plan? Because as Mr. Williamson just mentioned on page 57, if I look at those top figures, and I haven't gone blind yet, the total income figures shown or total revenue are totally different in the handout we've been given and what's actually in the draft annual plan.
And that's exactly what I've explained to you, Councillor, is that we have taken $2.9 million out of the 77. It is now shown below under asset development and other gains, which is a closer alignment with accounting treatment. If you look at the bottom line figures of 5093, it is identical.
So, Your Worship, Neil, on page 57 in this document here.
Yes.
Yeah. Because I just want to follow what you just said. It says income rates. On this page here, it says revenue rates, including water supply.
Okay. So,
which is different. So when you say things have been moved down, can you just explain a little bit clearer where because it's difficult just to. It's a pity there wasn't highlighted in red on this or something like that.
Sure. Now that's I understand the question very clearly, both councillors, and I will endeavour to
just go
provide
a little bit slower.
Slow, yes, certainly. I have a habit of talking too quickly. I apologise. I guess the most important point, I guess, is that first line, the one that says rates revenue. You'll note that on both copies it is 58,235. So I guess that's the first and most important point I'd like to make, is that the amount that we're saying that we need to collect from the community has not changed. It is the same thing. So what we have done is we have aligned the how do I explain this? There are many ways that you can present accounting information. What we've tried to do is to align it in the most correct and consistent manner with the annual report going forward. Hence, we have, if you look on the handout, about a third of the way down the page, there's that area that says asset development and other gains and losses. you'll see there's 4 lines there, starting invested assets, development and financial contributions, other gains and losses, subsidies and grants. That totals 2911 for the annual plan year. Previously, that sat up in the total revenue, total income line. So if you add the 75007 and the 2911, you'll get back to 77917. So what we've done is we've just moved it down into a new section, and the reason that we've done that is it's what's called capital revenue. Okay, so as I say, it's an attempt at clarity in actual fact, because you have 4 items there of what is classed as capital revenue, which doesn't directly affect the rate line. So what we've tried to do is to show that below the line, which is quite consistent with how a number of other councils do it. And I personally, as an accountant for too many years that I can remember, quite frankly, think that it's a far better way of presenting financial information. So we've tried to make it more clarity to the reader. And but however, I do apologise that we have actually thrown this at you today, which is a bit unfair.
So can you just point me to the second one down? It says profit on sale of property assets. Where's that now on this page that you've handed to us?
Right, it's under other gains and losses.
Other gains.
The third bullet point down. It is part of that number. It is not there on its own.
It's not separated out.
No, that's right. It's part of other gains and losses,
okay, that's fine. Yeah. It's just that.
Yeah, if you're trying to do a 1-for-1 match, you won't be able to see it there.
You won't be able to see it.
Yeah.
Okay.
So, Councillor
Park. I think. Oh, sorry.
Sorry. Just a question around the draft annual plan summary, which looks lovely, Lisa. Under about our finances box on the front page, it talks about the additional 0.9%. I'm just asking this because I know I'm going to get asked it. The 0.9% in rates funding to deliver current activities of council at the same level of service, which to me is operational, right? Right, and then you go to the second page and there's a creating efficiencies box, and it says that this year we've been able to cut out just over 100k from our operating expenses. While that might not sound a lot, it equates to a 0.2% decrease in rates, which means there is no rate increase due to our operational costs. And to me that doesn't make sense.
That makes sense.
Right. So does it make sense to anyone? Makes sense to me, but
well, to the average, to the normal person out there who reads this, to me that seems like a contradiction.
Yeah.
Okay. Perhaps I just better read it again. I know what it is. Trust me, I know what it is. There's 3 elements. There's depreciation, there's interest, and there's net operating costs. It's referring to the net operating costs.
Right,
what it's doing.
Yeah, no, that's great, and I know that there'll be an explanation for it. But to the common, I don't mean to the normal, busy, full-time person out there who picks this up and reads it because they don't have time to read the whole document. Does it not seem? Thank you.
Because I'm too busy to understand.
We don't all have your wonderful brain, Mr. Ward.
Yeah, well done, Councillor Park. Good idea.
With
anything else?
Just with the
Councillor Williamson.
Subsidies and grants. Seems to be a massive increase from 748,000 to 2.2 million.
Hold on, sorry, I'm just catching
up. It's in the annual plan, in the agenda, it's about the 4th line down on the income.
So this is the one on the agenda?
Yeah.
The 2245?
Yeah, but on this new sheet we've got, it's got
1497?
748, yeah.
Yep, okay, so what you need to do is you need to add that 1497 with a 748, which is down in that new section that I put in. So I'll explain what that is. In terms of subsidies and grants, it's made up of 2 components. You have what's called an operating subsidy and grant, so that's from NZT. The easiest explanation there is NZTA. So we get a subsidy on the maintenance program there. So that's what the 1497 is, and there'll be a couple of other little rats and mice grants in there. And then any subsidy that comes through on the renewals program or new capital works is what's called a capital revenue or capital grant. And that's what's now reflected in the new section. So if you add the 2 together, you'll come back to the other number. And again, I apologise, it would have been a damn sight easier if I just gave you 1 and not 2 ones of these paper to look at. So, yeah, sorry for that. Thank you.
Your Worship, the comments been made about another 1.1 million needed for depreciation. The figures that I gained out of the document you gave us on the 20th of February, which is this one here, that document, my total came to 188,000. Why is there a difference? The thing I'm really trying to point out, we've been given one hang of a lot of material to look at, which seems to change almost on a daily basis. Now, I don't think that is fair to us as councillors. You know, if I said to someone what's bovine somatotrophin, you might not know unless you're a farmer. I'm trying to come to grips with something that it changes almost on a daily basis. So the depreciation was just one. If you can explain to me why this document had 188,000 and yet you're saying we need 1.1 million more. Thanks, Mr. Ward.
That's it's a good question, Councillor, and yeah, I acknowledge that. I disagree with the changing on a daily basis, but I certainly accept some
weekly basis.
No, I actually disagree with that as well, because the numbers are actually the same, but it does require further explanation. The bottom line is this is $1 billion business. It's a large corporate entity. It has a very complex financial structure. It must meet international financial reporting standards as well as the financial reporting and prudence regulations of the Act. So sadly, I would love to be able to present something that is nice and simple to you that you might run for a small business, of which most people in Taupo are used to. Sadly, the law does not allow us to do that for this large corporate entity. However, getting back to your question around the depreciation, and this is where the confusion has come in. In presenting these financial statements, which are presented in a way that complies with the aforementioned IFRS standards and financial reporting regulations, we have to report what is known as total comprehensive income. Okay, so that incorporates all accounting disclosures and the methodology by which you must report income and expenditure. You then need to work out how much actual cash you need to run the business. They are not one and the same. And maybe an analogy that I can use there that perhaps the lay person or small business person may understand is that you have your set of books that your accountant does for you at the end of the year, and then you have your tax set of books. And I'm sure you will appreciate, having been in business, that they're both two separate sets of books and two separate numbers. It is a similar sort of thing here for council. So with respect to in respect to the numbers that are reported through the Statement of Comprehensive Income, all of what you see there is not cash requirement to fund the council. There are certain adjustments that are made. And I guess that perhaps the simplest explanation, or two simple explanations I can give for that, is one of them is the asset sale component, where we're applying, in terms of setting the rates, we're applying some asset sales as subsidies. And the second one, which I think is possibly, hopefully a more better understood one, and it relates directly to depreciation, is that accounting requirements require us to report 100% of the depreciation incurred on our transportation assets. However, in a funding perspective, we receive a 47% subsidy from NZTA. So what all councils throughout New Zealand do is they must report 100% of the depreciation through the books. However, when it comes to setting the rates, we don't want to double dip the community, so we only collect the 53% of the depreciation in cash that we need, because we're receiving, on the other hand, a subsidy line which is shown under subsidies and grants on the fourth line down. We receive cash from NZTA for that. So getting back to the question around depreciation, when you've gone through and added up the cost of service statements, which you clearly have done, and I've done the same thing myself, you'll note the value that you get in depreciation there. However, the difference between what we're actually collecting in cash is the $1.1 million. So that's not solely to do with NZTA, it's to do with the ETA and a few other factors as well. What I'm trying to do is to paint a simple example of how you get a difference between the accounting disclosure and then the cash requirement required to fund the business. I hope that has assisted.
I hope it has too.
Thank you, Neil. Thank you. Just a query too, just on the back of this little thing, like beside the Lake Terrace viewing platform. It's not actually beside, it's on it, isn't it?
It's to the meeting to the right,
There's two little bits out the side. Okay. Thank you. Councillor Cousins.
So just one more thing, through you, Chairman. Just for the council hiahia, clarify it because I could be read it wrong. As an example, in Turangi, 98.5% of residential rates pay 100 kilos a week, 100 kilos or less a year, I think. Of those, 1,035 or 51.5% of those people will receive a decrease in their rates. What I'm missing something. I don't sure how that's meant to spin.
No spin, it's just facts. I'm sorry, I'm confused by your question.
Well, but 98.5% are going to pay $100 extra a year.
Or less, up to. So between 0 and 150. Or to look at it another way, 150 or less.
Yes, but that's still an increase, but then it says 51.5% of the 1,000 people or less.
Yeah, okay. Hold on, let me just actually read it again because I think I can see where you're coming from. Okay, so 150 or less includes negative. Does that clarify it? Yeah. Yes, I can see, I can see that, yeah. So perhaps we can sharpen up on the wording there.
Yep.
Okay.
Your Worship, I just had one question for Sue, please, which is just more a matter of policy. It says, obviously we go out to consultation for this, but then it says in the documents that we have that there are some limits on how much can be changed before new consultation is required. Can you please quantify or clarify what that exactly means?
We talked about this in the workshops, and that is whether something's significant. Or not.
So it just goes down to whether it's significant. Just. Okay. All right. Remove the just.
It's still quite a hard decision to make, but it's something that we have to be mindful of when we're in deliberations.
Well, Your Worship, I'm still not happy. We can actually change. And one of the things that's thrown back to us is that part of it was decided on in the long-term plan, acknowledged, but we can change some of them. I think, sir, I asked you on Thursday when it was in the office about we as councillors yet have not had a debate on things that we can change before it goes to consultation. Now, I don't want to bring up in this forum, but I will if I'm pressed, some of the areas that I think need serious looking at. And as we go page by page through that annual plan, there are some areas there that I believe that we can alter. One of the things we haven't done, once again, when we have all these, what they call it, the differentials. We have 1, 1, 1, 1. Now, why aren't the generators 1.1 or 1.2? Why is commercial accommodation 1.8, not 1.7? We just talked this morning, we had enterprise and destination, and there's areas that we can move that won't be substantially changing until next year's long-term plan. So I can see some of the top tables are ready to give an answer, but I'm far from happy.
Councillor, any other councillor, or do you want to comment on that?
No, can't always be happy.
It's not happy with what the outcome is. I'm not happy with our ability to make changes. So the impact on the community is not as large as some. For instance, and I'll give the answer immediately, is the remissions part of the rates?
Yes.
So therefore, hypothetically, in my particular case, I'm sitting on 400. Does that remain the same, or is it reduced? Because when you start looking at some of the properties, what's actually carrying as baggage, this next year is the last year, supposedly, unless there's some serious cases where this will be taken off. And I've suggested to Mr. Ward that maybe at some stage he could give me an indication, as the long-term plan did, what we may be looking at for 15, 16. I don't want to be sitting here this time next year doing a long-term plan when by jeepers we've got a major problem still. I'm very nervous about that.
As far as the long-term plan is concerned, that will be addressed, a lot of those matters, in this particular calendar year. They won't be you sitting here this time next year. And as far as who's wearing the burden, the lower valued properties could actually say that they're subsidising the higher valued properties until the higher valued properties are fully funding their own rates. In other words, the remission has been used up. The remission policy is as per the long-term plan. It's an unfortunate basis upon which we operate, where the long-term plan drives so many aspects of our business. We would love to be able to be a lot more flexible too, but issues of differentials and things of this nature, the rules are the rules as far as what we've got to operate under. And that's a long-term plan scenario, not an annual plan scenario.
Okay, Councillor Harvey.
Just regarding remissions, it's my understanding that we do have the right to extend those remissions?
Yes, as part of the remission policy that was agreed to in the last long-term plan, it was to be reviewed at the end of the 3 years. So that was part of the massive workload that we all within this room have got to face in the months ahead.
Okay. Okay, we've got a suggested amended resolution there. Council adopts the draft annual plan 2014 and 15, summary of the draft annual plan with amendments. And part 2, the Council consults with the community. The community will have their chance to say in accordance with the Local Government Act 2002. Do I have a move?
So, Your Worship, we're not going to be discussing anything that's in the annual plan that we may be able to alter.
You can do that right now if you want to.
Well, I would start on page 1 and work through. It's going to take a couple of hours. But then again, if we'd had that meeting on the 7th of March, maybe some of these points would have been clarified, and this could have been a breeze.
Okay, just to clarify, so you could council body submit to the annual plan?
Anyone can submit to the annual plan. The question would be, would one of your councillors want to submit to your own approved annual plan? So that would be a question for you to answer. I would say that hearings and deliberations are the time to sort out any suggestions as to what the draft annual plan should be proposing.
Okay, thank you. All right, I have a mover. Councillor Park, seconded by Councillor Stewart. All those in favour, please say aye.
Aye.
Those against?
Oh. Could I have that recorded, please?
One against. Okay, council body against. Resolution is carried. Thank you. We'll just adjourn for a 5-minute break and come back for item 12. Thank you.